the recording is always. All right, so great to see every single one of you. Right, tonight is super exciting because I'm going to review to you my strategy for 2025, as well as recently the market has been pretty volatile, right? So what exactly is happening to the market? How many of you actually have certain question mark? If you have certain question mark, you can type question in the chat, right? Like with interest rate cut, how come, right, the market is actually reacting negatively and actually dropped quite a fair bit in the last 2 days as well. Okay, so Kate is having question mark, Esther as well. All right. So apart from me, later on, I'm also bringing an economic expert. He will also share with you his insight so that to help you to navigate through this uncertainty better. Right. So without further ado, I'm just going to share my slides. And if you guys can see the slides, just let me make sure I share the correct screen. Then we are ready to get started. Okay, this is the one. Right. Are you guys able to see my slides? If you yes, please type S in the chat. All right. Fantastic. So awesome. All right. So 2025 market update. Wow. I think time flies. That's been 1 year. Right. I think like it's very important that we really treasure time. And I was like, wow, just blink of an eye, we're already coming to a year. And I think for the past 1 year, if you think about it, the market has gone up tremendously. And then, of course, recently with certain changes and you know, like the one of the biggest news of course, right, the change of president. And since Trump won the election, the market has been actually pretty bullish, right? The market was pretty happy for the entire 1 month, right? But only until, right, 2 days ago, there was certain announcement being made. Suddenly, all right, there is a lot of fear and uncertainty, right? So just a few days ago, the market dropped a little bit. And then after that, right, yesterday, it continued to drop further. So if you look at the pre-market later on, we also don't know what's going to happen to the market, but it seems a lot of uncertainty out there, right? So if you look at the fear and greed index, people are actually getting scared, right? With a lot of you know, headwinds out there. So why exactly are people fearful? Even though actually the Fed made certain announcement that it was actually just cutting the rate as scheduled, but the market is reacting to it. And in 1 day, you can see that S&P 500, it actually dropped like close to a 3%, right? You can see the latest red candle was really long. So you can see that the market was actually reacting pretty violently. And yesterday, right, if you see the latest chart, yesterday it was another red candle as well, right? And not just the S&P 500, obviously, it was also the tech, right? The QQQ also dropped pretty significantly, of course, more than S&P 500. And then yesterday it continued to drop further. So why did the market suddenly take a turn despite of being so bullish for the past 1 month, right? So this is where we are going to dive into different insights. So at the end of the day, right, whatever things that I'm sharing is just my personal take. It's never, once again, never an investment advice. It's all about doing your due diligence and educating yourself, right? If you understand where I'm coming from, can you type D in the chat, okay? D stands for diligence, right? Instead of Santa Christmas, it's gonna be Grinch Christmas. Oh, I don't know, truly. Okay, let's see. Let's see. Okay, Christmas is not over yet. And for those who are coming for my Christmas party tomorrow, I'm very looking forward to seeing you guys physically. All right, finally, then we can take a group picture, like a real group picture together. Okay, that would be awesome. All right, due diligence, huh? So now, right, what was the announcement that caused the market reaction? And as you can see, right, even though Fed cut rates as scheduled, right? However, because Fed also said that they project to have fewer rate cuts next year, that's what is causing the uncertainty. Why? Because previously, according to Fed's plan, they continue to want to cut more rates quite consistently next year, not just this year, but next year as well. But with the stubborn inflation, Fed seems to be looking at it differently, right? And of course, with Trump becoming the president, right? He's going to step in January next year. Some of the policies will also start to change, right? Because different parties, they do have a different direction ahead for the country. And do you know that actually it's more important for us to be careful during this period of time, because certain policies that Trump is going to, at least what that he said, right, during his presidential election campaign, it's not going to be very favorable especially to inflation, right? Because what can cause a market meltdown, right? If things turn to be even worse than the inflation, guys, do you know what is something that is worse than inflation? Can you put it in the chat? Oh, MW, I will be actually uploading the recording onto my YouTube channel as well. All right. So over the next few days, right, after the Christmas party is over, I will also upload this onto my YouTube channel, right? So you can always rewatch it. So guys, make a guess. What is worse than inflation? What can potentially cause the market to melt down even further? What was that? If you still remember, like previously we had a bear market, right, for close to 1.5 years. That was during the inflation hiked so much, right, and that was the cause for the market meltdown. But what could be worse than inflation? It is, yes, all right, some of you got it right. It's stagflation. So what exactly is stagflation, and why is there such fear that maybe stagflation could be coming, and that is the reason causing the panic? So now, for those who are very new, right, let me just briefly explain to you what is stagflation. Firstly, the inflation remains stubborn, right? Very persistent, is still relatively high. And we all agree, even though the inflation rate did come down a little bit, but later on, I'm going to show you certain statistics and insights, and you can see, well, could this be coming back, right? That is one of them, high inflation. And at the same time, the economy is not growing fast enough, right? So if the economy is growing very fast, then people are making a lot of money, businesses are making a lot of money, then it's okay for inflation to be high because people are able to cope with the inflation due to rising income. But on the other hand, if the economy is not doing well, businesses are not able to make a lot of money, and as a result, employees are not going to get a lot of money as well. So because of that, they have probably higher unemployment rate. And because of that, it's causing a very, very big problem. The economy is not growing, but at the same time, the inflation rate is very high. So as a result, it becomes very stagnant. So that's called the stagflation, right? And because of this, the monetary policy will become even more tricky, right? Because if it's just high inflation, or if it's just like a very good economic growth to keep up with the rising inflation, I just need to increase my interest rate. But if the economy is not doing well, if I keep on increasing the interest rate, become harder and harder for companies and businesses to borrow, then the businesses are not going to grow as well. So that's why this is the tricky part, which is much harder to deal with as compared to just pure inflation, right? So if you look at the projection by different statistics, why is it that when Donald Trump become a president, there is a much higher likelihood for inflation? It's because, right, as you can see, right, Donald Trump, so many people voted that if he become a president, right, the majority of the economists expect higher inflation as compared to Harris. And the reason is because one of the policy that Trump is championing in is he wants to increase the tariffs for different countries' imports into US, right? And he's not just targeting particular countries like China. Like obviously, he previously during his presidency, he wasn't very friendly to China anyway. So when he come back, okay, this unfriendliness is just going to be even more, right? So there's up to a 60% rate for China, right? And at the same time, for other countries, he is also going to implement tariff as well, right? Up for 25% tariff on like goods from Canada, Mexico. So because of that, when things become more expensive, then obviously inflation goes up, right? Because goods generally become more expensive for the US citizen to buy, right? And on top of that, right, there are already signs that, you know, like likely to drive consumer costs up even further. So there are different kind of category, be it is it from toys, household appliances, and all this. So under Trump's presidency, this is what they are expecting, right? So imagine a bear case scenario versus a bull case scenario. A bear case scenario is, well, he's going to implement tariff, but at a reasonable extent. Then the other bear case scenario is like, it's like extreme kind of extent, right? But regardless, you can see that the change in consumer price is gonna be quite significant, right? You can see this, right? And where's my mouse? Okay, I'm trying to find my mouse. Okay, over here, right? So you can see change in consumer price. This is based on the projection, right? 36%, 19% for household appliances. Travel is going to be more expensive, apparels, furnitures, right? So this is the scenario A, which is the mild scenario. But for scenario B, it's the more bear case. This is where the prices will go even high further, right? So that is why a lot of people are very worried, including the locals, right? The farmers are worrying that Trump's immigration policy, okay, apart from he's going to implement tariffs on other countries' goods to come in, he also wants to make sure he limits immigration, right? Because he doesn't want too many immigrants to come to the US. He wants basically the US people to be working for the US industries. However, as you know, US people, they generally expect a higher pay as compared to immigrants. Just like, for example, if you're in Singapore, we generally expect a higher pay, right, as compared to foreigners who come in here to work for money, right? And that is why these will also further cause the labor cost increase. And because of that, right, the goods will become more expensive. How many of you can follow so far? If you can follow, right, can you type me in the chat? Right? Has it been making sense in terms of what could potentially change to the economic future since Trump is going to be the president anyway? Yeah, it's already confirmed just that in January, right? And then after that, right, as you can see over here, this was just the recent few months data, right? And obviously, as we can see, the inflation is actually coming down, right? Previously, it went up really, really high over here, right? So due to the past 2 years of increasing interest rate, it's coming down, right? But what is something that's happening quite interesting is, despite the fact that it's coming down, recently, if you can see this, there's a small uptick, right? So could this be the beginning of rising trend of interest rate inflation again because of certain policy changes? Well, we never know, right? But this is what something people are fearful of, right? And this is in terms of the consumer price index. That means how expensive the goods are, right, in the US. But if you look at the producer price index, which is how much it's gonna cost for producer to produce the goods. So you can also see that right now, right, there is also seems to be an uptick in the production cost. So with the new policies coming in, it's likely that these production costs are going to increase due to higher labor costs and also due to higher tariffs costs as well, right? So that is why, right, even big companies like Costco, who are very good at controlling costs, they also already give warning. They say that, right, because of the tariffs, right, when it rains on everybody. So even low-cost controller like Costco, they are going to hike price, right? Because they cannot be the only one that tank the increasing in cost, right? They need to pass it to the consumer. So as a result, in general, if Costco also says that, it's very likely that the prices in the US will actually continue to hike from here, right? So this is my insights for now. But right now, I want to introduce you to my very good friend, and you guys have seen him multiple times. And of course, obviously, I accidentally revealed his handsome face, Ethan. And as you all know, right, Ethan breathes and eat interest rate every day because he literally need to monitor the interest rate market to see how can he help his clients better, right? Because he does with mortgage, right? So that is why right now I also want to invite him to come up to share with us his insights on the interest rate trend, because recently, right, Fed just made this announcement. He's going to dissect for us, and as well as showing us some very important economic data for you to have a better understanding of the entire situation, right? So how many of you are excited to learn from Ethan? If you're excited, right, can you type E in the chat? Okay, E stands for excitement. And at the same time, E also stands for Ethan. All right, awesome, guys. Okay, let me just stop share and welcome Ethan here. Hello, Ethan.
Hello, everybody. How are you guys doing today? Hello, good evening, good evening, good
I
evening.
love your suit today. Like, you're so well dressed for tonight.
Thank you. You too.
You look like you're
So,
going for a Christmas party later. Oh yeah, tomorrow Ethan will be
same
there at
uniform.
my party as well. Okay, so if you ever come to my party tomorrow physically, make sure you chat with Ethan as well, face to face. Okay?
All right. Actually, Chloe, I love what you said about Trump and his tariffs. There is one video that went around. They say that Trump has two ways to tell people about the tax. I'm not sure if you've seen it.
I
Uh,
haven't.
One is you get one guy go over, hi, excuse me, we have a 25% tax. The second one is a little bit dirty. Listen, you MF, we are gonna tax you 25%. And when that happens, like what Costco fears, there will be tit for tat strategies, and there will be a lot of confusion, a lot of movement, a lot of excitement in this year to come. I think it will be a year where we will either maybe start tasting stagflation, or possibly just avoid it by a near margin. I think
Mm,
that there is a lot of things to unpack today, and I'm so excited that we get to talk about it. So
I'm so
let's
excited
go.
too.
All right. So, my friends, today I'm going to talk a little bit about what Mr. Jerome Powell has shared. So I want to go briefly about talk about the economic updates in today's environment. I want to be able to share with you. But first, let me introduce myself. I am representing Unbeatable Mortgage. We work with 10 bankers. In fact, we work with 10 banks and have more than 10 bankers. We are one of the more highly rated mortgage brokers in Singapore with 4.9 star. A lot of them are from me, but now my team is expanding. So wonderful, wonderful stuff. Our framework is very important, because what happens, right, is it is my hobby to help people save money, right? So every time I go over the rates, right, later you guys will see how much I care about understanding the right rates. Just choosing the right rates can help you save $10,000. Having the right strategy, having the right structure will save you much, much more. So I help my clients from purchase to exit, and even advise them on all the different strategies that they should be hearing lah. And when I tell them everything, it is usually to help them save money. I run a very kumbaya business. If you save money, then we'll do something together. If you don't save money, we're not going to do anything. All right. So that's our promise to you. And if you look at our reviews, you will be able to know that we go beyond our surface level advice. We go a lot deeper, and we go into the projections and everything. So today we just want to nail one thing very, very, very right for everybody. So the one thing that we can nail today in the public domain is understanding where the interest rates are going to go. First things first, Singapore does not control interest rates. We are too small of a country. What we do, we export a lot locally, and we export and import a lot. So what we do is we control our exchange rate policy, which has a bearing on interest rates, but I'll get to that later. More importantly, when you look at the trend of the data, domestic interest rates have typically been below the US interest rates. And this has been true for the last 19 years. Okay. Over the last 19 years, I have a rather ostentatious Excel spreadsheet. It has more than 10,000 lines, and we have realized that there has been a 94% correlation. When the US goes down, Singapore goes down along with it. When it goes up with it, so on, so forth. So from there, we are able to roughly predict where interest rates in Singapore is likely going to be based on what the Federal Reserve released. So I want to tell you guys, this one is our normal French. We have to disclose, especially when we're in public domain. Okay, so you need to know that I am not able to see into the future. Chloe and I, we are not gods. We are just hardworking. All right. So that's it. Let's go into the monetary policy. Let's understand what happened other than the more standard things that we've been seeing lately. Number one, 25 basis point to 4.33%. But more importantly, my friends, more importantly, is not what they did this year. It's what they are doing for the future. future years. All right, are you able to see this? Let me try to zoom in. Okay, so if you can see right over here, you realize that last month, in last September, they actually committed to cut from 4.4 to 3.4. That is a 1% cut. But this time, right, they actually say that they are only going to cut 0.5%. This actually puts us in a position where interest rates are going to be held higher for much longer. And this affects even the long-term interest rate, which is very important in terms of pricing the mortgage rates in banks. So now you can see our current value of GDP growth is 2.8, which is still quite healthy. But when tariffs come in, there will be a question mark. It can either be better or it can be worse. The tit for tat strategy may hurt the economies in a long run. Until now, there is a insane tariffs on Volkswagen, and they are not able to sell their shares. They are not able to sell their cars in certain places. The unemployment is 4.2%. The tariffs are going to likely help. But once again, it is a wild card because we don't know how he is going to implement the tariffs. The PCE inflation right now is at 2.8%. This is a very interesting one. Later when we get into the data, oh my goodness, guys. So the gross domestic product at this point of time has been quite high, 2.8%, which is not bad. However, you can see that this is actually quite flat. This is normal at this point of time. We do not want any changes. I think that this is good if it stays more consistent. The unemployment rate though, the unemployment rate over here, first things first, it was rising and then it come down and then it go up again. So the thing is, what happens is Jerome Powell and his team got two jobs. One is to lower inflation. The second is to lower unemployment. So if you were to want to lower inflation, you have to increase interest rate. And when you increase interest rate, unemployment increases. That's why stagflation is super tricky, because you are in a very delicate place where nothing works. So what happened, if I were to tell you a grandfather story about Paul Volcker, one of the economists in the 1970s, he actually had to pump interest rates to double digits twice, not once, but twice, to be able to tame stagflation. And we don't know if that will work again. When stagflation comes, what happens is your money, it affects the middle class the most because it has the most impact on people who have enough to hold but not enough to survive, not enough to thrive. So imagine if you are somebody that can make ends meet and plus a little bit. Then when stagflation comes, your money is going to reduce in value, and because of that, you won't be able to make ends meet anymore. Which is why we are particularly concerned about this. So remember just now I was telling you guys about this chart. This is the PCE excluding food and energy. This is Jerome Powell's mistress. He loves talking about this. I tell you, this is one thing that he looks at with a lot of focus. I tell you, if I have that kind of dedication with my wife, he will love me a long time. So I want to tell you guys, when you look over here, you want to be able to visualize the data. We see 2.6 is over here. Then after that, it's going to go up to 2.7, then 2.7, and then one more 2.7. Then it go up to 2.8. Now it is at 2.8. So Jerome Powell cut the rates right now. It almost brings a little bit of shock to me lah. So what I can see over here is that he would like to cut the rates to be able to help the inflation and the unemployment to come down into better balance. In the COVID era, he was fighting inflation a lot. Right now, he is fighting unemployment, which is also what Trump is looking to do by the tariffs, increasing tariffs, bringing jobs back to America, and then having the unemployment go back up.
So Ida, I just want to clarify this one thing. This PCE, right? How is it
Uh-huh.
different from the producer price index or the consumer price index?
Okay. So the PCE is the personal consumption expenditure. So you're asking about the which index?
Let's say consumer price index.
CPI. Oh, okay. So their basket of goods is different. Their basket of goods that they use to monitor is very different. If you are looking at the normal inflation numbers, this is the normal inflation that you and I are normally looking at, the headline. This is also quite funny because as you can see, it is
Yellow,
coming up.
it's coming up.
But what Trump is doing, right, is that he is what Jerome Powell is doing right now, right? He's actually trying to push down the unemployment rate, especially our last FOMC. We were talking about the GCEW jobs report, and the thing is it is still quite uncertain. So
Mm.
I also want to let you guys know something about what Singapore do. Okay, so you want to predict SORA, you need to understand the US monetary policy and the Singaporean monetary policy. These two work hand in hand together. So if you understand this, right, when US cut rates, Singapore is supposed to raise rates or cut rates, everybody. Everybody type in the chat. For cut, type C. For raise, type R. Okay.
So when US cut rates, Singapore is supposed to cut C or raise R. Which one?
Yeah.
Okay, a lot of people typing C.
Excellent, excellent. So Singapore is supposed to cut rates, but as you can see, Singapore MAS will therefore maintain the prevailing rate of appreciation of the Singapore dollar policy band, and there will be no change to it with and level which it was centered, which means SGD is poised for an increase. All right. So my thoughts about everything so far, right? Let me just share with you guys what I feel. At this point of time, it may be a possibly premature cut, but it is a very strong move. It is a very strong move because it instills consumer confidence, which is an indicator that helps with the projection of things like inflation whatsoever. The outlook on tariffs, it may bring job back, or like I said, it can go very sideways very quickly. Inflation outlook, it is uncertain. The data shows that the stickiness of inflation, you see, don't want to go down. 2.5, 2.4, then shoot back up already. So the thing is, if inflation comes back up, the worry of stagflation is going to be there. So the answer to how you solve stagflation is to optimize your cash flow and to make more income. So that being said, I would like to leave it to Chloe to be able to share a little bit more about what we can do.
Wow, guys, how many of you agreed that you just had the economy masterclass? Like, how many of you love this masterclass? If you love it, can you type, I love it? Okay, I love it. Like, I think like because last time, right, actually I never take econs before. So only when I started investing, then I try to slowly understand a little bit, bit by bit. So I think even until today, my knowledge of economy is still very, very far away from Ethan. So I always love to invite experts like Ethan to come here so that they can always really share with us good perspective and how can we understand the situation better. Nice. Okay, very good. People love it. So now,
Thank
okay,
you.
so this is where I love Esther's enthusiasm. Exclamation mark, love it. Okay, so now, so the thing is, right, this is where like as Ethan shared, right, because the situation does seems a little bit tricky right now, right? We never know, would that be potentially like causing stagflation to come? Of course, none of us want that to happen, but in case it does happen, or at least we want to make sure we protect our portfolio well. So this is what we always want to see, what are the real like super amazing legendary investors out there are doing, right? So one of the model that we always look up to is absolutely Mr. Buffett. Okay, so if you look at Mr. Buffett, these are the data that you can find from online as well, right? But I done the work for you so that you can save time, right? So as you can see, right, Buffett is literally sitting on ton. I don't know how to describe how heavy is these piles are, but just piles of cash, right? Tons of cash. And how do you know, right? If you get it from Guru Focus, you can see that the cash holding percentage versus its equity, Buffett's Berkshire Hathaway equity investment percentage has changed quite significantly over the last 1 year, right? In the past, actually, the equity percentage is generally quite high, right? And the cash percentage in the past, the chart is not showing because the figures block it, right? But do you know that in the past, right, the draft level of its cash holding is about 25%, right? But just in the last 1 year, it actually started to sell off more stocks, right? Be it, is it your Apple or Bank of America, quite a lot of stocks that actually Buffett sold away. And because of that, right, he has actually returned back to a lot more cash as compared to what he used to do for the past almost 10 years, right? And its equity percentage has also dropped quite significantly. In the past, it was hovering at about 65 to 70%, but right now it actually dropped to below 50%, right? And obviously the fixed maturity securities is still low. So let's not look deep into that. But I just want you to look at the number of cash versus equity. You can see that Buffett right now is really sitting on a lot of cash. So what do you want to do for yourself, right? So I'm going to show you my own personal game plan for 2025, right? Due to time constraint, I will not be able to share everything, right? But during the Christmas party, I'll be able to share everything. But today, I just want to share certain parts that I felt that was actually very, very relevant and very important to most of you guys, right? So now, the first thing is, right, I feel that it's important that you don't invest in just one asset class. Because should anything happen to the equity market, which is your stocks, ETF, can happen, right? If stagflation comes, I think the stock market is definitely going to be impacted. So you don't want to put everything into one basket. You always want to diversify, right? How many of you understand what I mean? If you understand, right, can you type D in the chat, right? D stands for diversification. So depends on you. What kind of asset class do you believe in? Do you believe that it has the potential to hold the value and at the same time also give you the growth, right? So for myself right now, okay, just recently I did this breakdown into what happened to my entire 100% of portfolio, and I have equity, I have Singapore and Hong Kong stocks, I have cash, obviously, right? But of course, cash, I don't put them in banks. I only have very little money in the savings account because that is the most liquid. But most of the time, I put my majority bulk of cash into, for example, money market funds. And one of the platform that I put it in just iFast because I felt that it's very trustworthy and it's a listed company in Singapore as well. So that's why I put my majority of the cash holding over there, earning pretty decent interest compared to banks. And then obviously, I also have some cash in Webull and MooMoo because they are the two brokerage platform that I personally use. Then property as well. For my down payment, I consider that as my form of diversification, right? Then if you have CPF, SRS, that will be another category. And if you buy bonds, I do have a little bit of bonds as well, so I also put it there, right? And actually cryptos, I started investing in crypto before the bear market of crypto comes in. So if you think that, wow, Chloe, wow, you're so good, like you managed to buy crypto at a very low price. Actually, it's not true. Okay? When I bought crypto at that time, it was at a very high price, and then it went to a crypto winter for quite a few, like I think at least 2 years, right? And went down, but I just completely did not look at it. And recently, when I reopened my account, because crypto for BTC it went up to 100K, then I went to check my account. Oh, okay, good, make money. Okay, so I also have a little bit of percentage inside there as well. And obviously, rainy day funds are something that you will not touch, you will not invest, because in case anything happens, you always have that cash available to cover certain of your expenses, right? So these are super important as well. And last but not least, there are the gold. I also started buying physical gold, right? If you watch some of my YouTube video and my sharing as well. So that's how I break down into different categories. So very importantly, right, I think that after today's sharing, you want to go and find out what is your portfolio, right? Because if you don't even track your portfolio, you anyhow buy, but you don't even know where are your money, then obviously you are not going to have clarity. So how many of you agree clarity is important? If you agree, can you type C in the chat, right? So do spend some effort to do this, right? Just to give yourself a clarity of where your money is. Then if you're able to have a big picture like this, you know that whether are you doing the right thing or wrong thing, right? So now for myself, right now, okay, for my current portfolio, I want to show you my current portfolio first. My equity investment, it's 49%. And this is majority inside the US market. So be it, is it my ETFs or some of my US individual stocks, right? So these are 49%. Then, of course, I have a little bit of Singapore and Hong Kong stocks, right? And these two categories add up. Actually, it's about, okay, these two categories add up together, it's about 50%. So if you think about it, right, if I'm using Buffett as a benchmark, right, Buffett has about 50% in equity, and then the rest of 50% right now, he's holding a lot of cash, right? So at least I find that in these two categories add up together, I'm pretty much aligned with the Buffett benchmark, okay? How many of you can see that? If you can see that, can you type 50% in chat? Because this one is about, if I'm not wrong, it's about 1 point something or like about 2%, right? So it's like very, very close. So to me, I felt that, okay, this is something that I am able to handle. Because imagine if today the stock market dropped, for example, really dropped 50%. It's possible, right? So let's say if it really dropped 50%, then my 50% of my portfolio will drop 50%, but I will still have for 25% in this case, right? So I don't feel so painful as compared to having 100% of my portfolio invested in the equity market, right? So at the end of the day, it's really about knowing yourself, what truly suits you. Because if you are a high risk taker, you can definitely put more money in the equity market, which can grow faster for you as well. But for myself, because I'm actually managing quite a big sum of money, I don't want to take small risk as compared to when I first started. And that's why I felt that to me, it's safer to keep it at 50%, right? So at the end of the day, it depends on you. You need to ask yourself that question, right? How many of you understand where I'm coming from? If you understand, can you type U in the chat, right? So there's no one size fit all kind of percentage allocation. Most importantly, as you ask yourself, can you sleep with it? Does it give you that peace of mind? I think that is the most important question to ask, right? And then after that, right, I also have crypto, like I said, right? I also have a little bit of crypto, and this is already after the rise in the prices. So previously, when I first bought BTC at that time, it was about 50 or 60K, right? So recently it jumped slightly 100K, then it started to fall back down a little bit. I don't know whether we'll continue to go further, or maybe it can also go to zero. I don't know, right? But at the end of the day, I felt that there is potential in cryptocurrency. Many smart people are buying that. And that's when, even though I would say that I'm definitely not a crypto expert, but I felt that it's a risk I'm willing to take. But if I were to lose, right, if I have to really lose everything, I'm not suffering as well, right? Because this is basically less than 5% of my portfolio. And that is the risk I'm willing to take. But if you ask me, Chloe, are you willing to increase it to 50%? That is definitely no, right? I don't think I'll be able to sleep with it. So at the end of the day, it's once again knowing yourself, right? So for myself, it's about slightly less than 5% right now. Okay, and of course, since I'm not an expert, that's why tomorrow, if you're coming for my Christmas party, I'm actually inviting experts coming here to share about crypto. I'm very looking forward to learn from Leslie, from Sabrina, from another guy, Steven. He creates his own meme coins as well. So there are many crypto experts that I'll be inviting to the Christmas party tomorrow. So if you're coming physically, then make sure just chat with them apart from their sharing segment, during the networking time, the mingle time. Just feel free to come up, even come up to me, ask me questions. We would love to really give you more insights as well, right? I want to ask, how many of you are actually coming physically? If you're coming, can you type C in the chat? Okay, you are coming physically, yeah? Or how many of you are joining us online? Okay, if you're joining us online, can you type O in the chat? O stands for online. Okay. So I know quite a lot of you are also joining online as well. Okay, so Lucine is asking how to sign up for the physical. So Lucine, unfortunately, the physical is max. So it's gonna be really packed. I think 100 people. So I cannot take in more because the office said that they cannot have the space to accommodate more than 100 packs. So unfortunately, okay, it's already capped. So for those men to get your physical tickets, congratulations. All right. However, if you have not gotten the tickets yet, and yet you still want to come to join us online and learn, because there will be recording provided to you as well. The workbook will also be given to you after the entire Christmas party is over. Then you can rewatch it again and again. Then just join us online. It's via Zoom, and my Zoom is also has capacity, as you can see, right? 100, right? So today 100. So tomorrow, if it's more than 100, then it's only for the first 100 as well. So if you are interested in, then just later on I will send the link. Then you can find out more about it. Then you can join us. It's only $9.90, okay, to join us online with the workbook and recording, right? But very importantly, right? Let me continue. The third thing I want to share is, right? So obviously, crypto is one of my strategy, right? Another thing that I always diversify is my property, right? And I truly believe that Singapore is a very strong and stable market for property investment. So right now, with me investing my first private property, the down payment, I consider only a down payment. I have not considered the potential capital gain. It's about 14% of my portfolio, right? And actually next year, I do intend to sell away my property and then buy a bigger unit in for planning for the future, right? Be it is it I want to rent out, or be it is it I want to stay with my family there, right? So this is something that I will work with Ethan, because he's the best advisor for what kind of property, and exactly, like, most importantly is what should I do with my mortgage, right? So I will work with him to upgrade my property, right? But very importantly, my goal is to eventually also increase my property percentage to higher. Right now it's 15%. I do want it to be like, for example, 20% of my portfolio. So then I will have the peace of mind that should anything happen to, for example, my equity market, my property market is still there to hold the value, right? And if given longer time, then the 20% will continue to increase in prices as well, right? So that's why right now, without further ado, okay, since we're talking about the property market, right, I also want to invite Ethan back once again. Like, what should we do with this interest rate seems to be holding? What kind of strategy will be best at this moment for our mortgage? Is it repricing? What should we be doing it, especially for people who have already property? Or if you're someone very new, what should they be looking out for? All right, so let's welcome Ethan back. Okay, can everybody type CCC? Okay, clap, clap for Ethan to come back. And later on, we will also have some Q&A time, so feel free to ask us some questions as well. All right.
Hello, everybody. I'm back. So today, Chloe, I think yours got 20% already if you count the capital gains, but I understand why you want to be humble lah. Uh, so the thing is, at the end of the day, what we want to do, we want in Unbeatable, we like to help people own properties, because honestly, paying rent sucks. It is very, very expensive. It goes to hell. There is no principal repayment. You cannot use your CPF, and your mother will scold you every 2 weeks. So terrible, terrible situation, which I like to help my clients get out of and help them save a bit of money here and there and increase their portfolio. By paying for your mortgage, it is the most boring way to become a millionaire. All right. So that being said, let's talk about this extremely boring and extremely profitable thing we have called mortgage. So let's go into how a mortgage works. All right. First things first, the home loan is godsend. 75% value of your home. Not many people in Singapore have $1 million to buy a house. Yeah. So what you do is you take up 25%, 5% cash, 20% CPF will count everything. So every time, right, when you're paying your mortgage, right, your money does not go entirely to interest, does not go entirely to your landlord. It will go into your interest and your principal. So every time you pay for your mortgage, it goes down. It goes down. And eventually, when it finish going down, you own the full property, and then you are able to have a nice day lah. Okay, so this is the only loan that can be paid back by CPF ordinary account, and you're able to choose between fixed and floating rate, which is very, very, very important, because you choose the right one, you can save $10,000 or $20,000 depending on your loan size. And today it is our job to be able to save as much money as humanly possible. So I want to get you guys all the rates over here. Please do not screenshot. Please do not share. This is all. I pauto the bank, and then I'll be able to get you guys these kind of rates lah. Okay. So as you increase in loan size, right? What happens is that you will get cheaper rates, because it is easier for the bank to process and economies of scale and whatsoever. So the thing is, one other thing I want you guys to know, right, when it comes to your mortgage, right, is that the thereafter rates for the fixed rate or the floating rate always very lousy. The thereafter rates, right, is usually 3 months SORA plus 1%. Today, the 3 months SORA is 3.128 plus 1% is 4.128. So if you guys are at this point of time are in the thereafter rates, which means you're out of your lock-in period. If you are out of your lock-in period, you are likely going to kena this 4.128 rate. And what I would strongly advise you to do is to don't make the banks so rich. Otherwise, you let me know which bank I go and buy their stock. We go into the fixed rate instead. The fixed rate at this point of time, 500K, you can get 2.55 and somewhat like that. But what is most important, right, is that these loans are super cheap. Why they are super cheap is because, number one, this is the only loan that you can pay back with CPF once again. And the thing is, this is a long-term loan, so they can lower the rate. But what's most important, right, is that when you are borrowing money, do you or the bank pay for inflation? Okay? The question is, do you or the bank pays for inflation? If it's you, type me. If it's the bank, type B. All right? So when you are actually excellent, much, you got it. So when you are actually borrowing from the bank, right, the inflation, right, is absorbed usually by the bank. Long-term inflation rate is approximately 2%. The borrowing rate of 2.55 minus 2%, your real interest rate is 0.55. But more importantly, these are rates that are cheaper than our darling Singapore savings bond. Our darling Singapore savings bond, they say 2.86, but this one is if you were to keep in for 10 years. I pauto MAS by telling you how much they are giving you on year 1, 2, 3, all the way to 10. But more importantly, as you can see, the year 1 is already higher than your mortgage rates. So if you all got rainy day fund, I highly encourage doing this. If you take out the money, it only costs $2 and they pay you prorated. So let me talk about which to pick. Okay, everybody. Okay, fixed rates or floating rate. Currently, the fixed rate is at 4.67, 2.465. It's a weird rate because year 1 is 2.55. Apologies. 2.6. Then year 2 is 2.38, something like that. So I cannot tell you which bank, but what happens is the average is around here. Okay, so that's it. Give me a moment. Eraser, let me get this a little bit more neater. Okay, so what I want to tell you guys, right, more importantly, is at this point of time, the fixed rate is going to be $21,000 cheaper if you compare on today's numbers. But the thing is, we do not just compare today's number. We project forward. We go ahead and use my Excel spreadsheet to be able to calculate what happened before and what's the correlation today. And then from there, using the power of data analytics, we are able to determine where SORA is likely going to be based on the updates that Jerome Powell gave us in the effective federal funds rate. So the current effective federal funds rate is at 4.33. The current SORA is at 2.98. looking 1 year ahead, we are looking at the effective federal funds rate to be cut to 3.9, which will give us a SORA value of 2.68. But more importantly, they have raised the longer run rate, which means this rate was increased. If their longer run rate was increased, this is likely the rate that the banks will look at to price their loans. If you're looking at 2.06, you plus a normal spread of 0.4 or 0.5 is already 2.5, which is why actually today the fixed rate, right, based on today, is actually one of the cheaper ones. So if you want to go in and understand, you want to go and find out the average, and then you want to calculate what is actually going to save you based on year average, you'll be able to see, even if we go into the average, we are looking at an approximate $12,000 worth of savings. How many of you can appreciate $12,000 being saved from your hard-earned from your hard-earned salary? Yeah. This
in
is
2 years, is it? In 2 years, right?
in 2 years. 1 year you
Yeah.
save
Oh my
6K,
gosh.
second year you save 5K, so to 5K
You can
plus,
literally use it to go holiday already. Like your 6K can go to the US and all this.
or you can invest and then go for more holidays in the future.
That's right. That's awesome.
Right. So, and the next thing, right, which is going to happen, although what's happening right now is not something that is super positive for our long-term rates, we already have experienced that the stress test rates for our banks so the stress test rates is the rate where you are measured by. So they use the 4.75 and then see how much you can borrow. At this point of time, it has dropped to 4% for building under construction, and you can see the increase is approximately $200,000. So can you imagine the whole of Singapore is able to buy maybe $100,000, maybe able to afford $100,000 more? Can I ask what would happen to the property market?
Increase.
Correct. So the thing is, when this kind of things happen, it is likely to increase, right?
The value of your property will likely to increase more. Is that what you mean? Like, or within a shorter period of time?
Likely to have a higher chance to increase more.
Mm.
And
Why TTSR will drop to 4%?
because they use the nasty rate. Remember the day after rate, the one they used to hantam people?
Yeah.
The 3-month SORA was actually 3.75 before ma. So 3.75 plus 1, then you get the 4.75.
4.75.
And
Okay.
now the 3-month SORA now dropped already. So
Yeah.
also drop this stress test rate. But they are using 0.6 for BUCs because it is of a longer term. That
Okay.
said, this comes to the last part where I want to share a little bit about what we do lah. Okay, with Unbeatable, our service is usually complimentary. We do have premium services because honestly, we don't get paid enough for certain things such as credit bureau recovery. So the credit bureau tells you how likely the bank will lend you AA, or AA, the banks will smile, BB, they will be concerned, and then as you progress down the line, they will move further and further away from you. The worst is HH, beyond GG. So personally, I really appreciate being here, and I really appreciate the love I receive. And that's why, right, guys, even though I have premium services, our objective is to help as many people as possible. If you guys ever need us to help you repair your credit, I know we normally charge 1,000, normally $1,000 or $3,000, depending on how bad it is. If you guys reach out to us, right, our team, right, will be able to help you and not charge you if you have. And this is special only for the special bunch of you that are here. My promo code is kakilang.
Oh my
Kakilang
God, I love that. Oh my God, you're
is
so nice. Kaki lang, I love this promo code.
our kakilang is Teochew for own self people. All right. So we just want to be able to help as many people as possible, to be able to save as much money as possible. And that's just what I like to do.
That's so sweet. And oh, by the way, okay, I think the credit bureau thing is a very tricky issue, especially if you accidentally get yourself into a very tricky situation. Most of the time, it's very hard to borrow money from banks and all this. Then this is where the kakilang promo code come into use. However, if you are someone who are normal, okay, you have a normal employment, most of the time have been paying back your bills very, very like regularly, that means you are pretty clean, right? And it's generally quite safe for you to be able to borrow money from the banks. Then that's when if regardless, right, Ethan's and the team service still comes in, right? So if you are interested to actually have Ethan and his team to really work with you in terms of how to save more money for your own mortgage, then do consider jumping on a complimentary consultation call with them, right? So for myself, okay, let me just share this. This is basically the code to scan, but let me share with you the link also, so that it's easier for you to click on it, right? So for myself, right, like I said, like previously, about 3 years ago when I first bought my property, it was not very good because the interest rate suddenly increased by a lot, right? That was like, I bought it during COVID time when the interest rate was low. Then after that, after the building finished building, right, because it was a new project. So after they finished building, whoa, when the full interest rate kicks in, I was in like panic mode. I'm like, oh my gosh, that's a lot of cash flow being out to pay the mortgage. And it was a floating interest. So if you still remember, just about 2 years ago, the floating interest was so high. It was like 4 point something over percent in Singapore, right? So I was paying a lot of interest, and I didn't know what to do. Then one of my good friend, right, introduced me to Ethan, and that's how he said, hey, Chloe, you can quickly change this mortgage situation to become something that's very, very comfortable for you to deal with, right? So that's how he went through with me my mortgage issue. What can I do? What can I reprice, or should I refinance? And eventually I managed to really reduce my mortgage by almost like, I think, $2,000 per month, right? And because of that, right, my property rental is able to cover my monthly mortgage right now. So in a way, I'm still renting out my unit. My tenant is paying me money every single month, and whatever money I receive is more than enough to pay the mortgage. And it's also enough to pay the property tax. It's also enough to pay for like condo maintenance fee and all this. So, and on top of that, I still have a little bit of cash flow every single month from deducting all the expenses. So I think Eden has really saved me a lot in terms of financial like troubles. I don't need to worry about, oh, this property is like basically draining my cash flow. Instead, it's actually giving me positive cash flow every single month, right? So I highly encourage you to look into your situation. Maybe you never thought about how you can improve your mortgage situation, but Ethan and his team are very, very experienced, right? They have been in the industry for many, many years, and they are very quick with the numbers, very quick to give you the best personalized advice for you. And it's complimentary.
Absolutely. And the thing is, every time when we have a consultation, right? Every time we will be able to catch one or two of these things, and every time we catch one time, right, we are able to help you save a few $1,000s. So the thing is, it is very important for people to reach out, especially even if your mortgage isn't even due yet. If your mortgage is not due today, still sign up today, because it is important for you to make an appointment with us so that we'll be able to reach out to you, preemptively tell you when the interest rates are going to be retracted, what rates are good, whether you should reprice, refinance, or even get a new loan. I always joke, we only do 4 things: help people buy property, help people refinance property, help people reprice property, and help people sell property without paying penalty. So those are the few things that we like to do in Unbeatable Mortgage. All of it revolves around saving people money and doing our thing. So yeah, please reach out. We are friendly people. We are helpful people. We are here to help you save money.
Okay, so let me just quickly show you guys the form, like how it will look like if you ever want to get Ethan and his team to look into your property situation. So obviously fill up your contact information, right? And that is when, right, please also let the team know, right, what are you looking for? Are you looking for applying for new loan or refinancing or repricing? Or if you are others, right, you just type it down, right? If you are in tricky situation that you need help, you can elaborate more over here as well, right? And make sure also fill in your preferred date of call, right? So that Ethan can and the team can also fix a call according to your preferred time, right? So there are two dates and two time, the day and then the time for you to choose. And after you just click the submit button and that's it, right? So I think usually the first call, Ethan will be, and the team will basically just call you via WhatsApp first, right? And then through the WhatsApp situation, through the WhatsApp call, they can already quickly analyze your current situation and then how can they quickly work out certain numbers for you to see how can you improve your mortgage situation as well. Is that correct? Because that's what we did the first time, Ethan.
Absolutely. And in Unbeatable Numbers Talk and BS Walk, we do not like to tell you fluffy things. We want to try to justify with as much concrete evidence as possible. And yeah, that's what we like to do. We give you more in-depth and more precise advice to be able to help you with your mortgages.
All right. So in the meanwhile, if you have any questions regarding mortgage or regarding like property related kind of inquiries, okay, feel free to also ask it in the chat since Ethan is here, right? He's also more than willing to help you guys out as well, right? Just to clarify on the spot. Okay, I think we have another maybe 10 more minutes for Q&A before we wrap it out. Okay, so I think previously I saw there's a question. This one, okay, wait, let me see. I think previously I saw a question. Okay, so for someone looking to remortgage their home loans early next year, should one take short term or long term, fixed or floating? This is from Eva.
All right, Eva. So you know that current interest rates, right, are pretty already has priced down quite a bit because everybody expected it to come down. Let me just try. Oh, don't mind, Chloe. Can I
Yeah, you
share
need to
my?
share screen. Okay, sure.
I say thank you. Okay, screen. There we go. So guys, last time, right, what happened was after Jerome Powell dropped the 50 basis point cancellation, right? A lot of the banks are actually go into emergency meetings with their economists. So they meet up with their economists to talk about what is happening in the market. And then when the economists say, hey, the 0.5 was very unexpected, everybody cut rates. So everybody cut rates already. Then after that, Jerome Powell do the opposite thing. So everybody cut too much. Then right now they are thinking, hey, maybe we are losing money. So there are some people that are pulling out their rates, but you need to know at this point of time, right? We are basically getting rates that are good for 2026 and 2027 all the way even until longer run if we get the fixed one. And the thing is, we don't know, right, what's going to happen in terms of the tariffs. We do not know what's going to happen in terms of the inflation, stagflation, etc. So the best thing to do, right, is to choose the best rate, choose the cheapest rate, and fix it for a decent amount of time. There are the 2-year fixed rates, which I think will be better to be able to ride out this wave. But once again, it is very different for everybody. Certain people have intention to sell, certain people have intention to decouple or whatsoever. And everybody has a unique case, best to talk to us.
Yep. All right. Okay. So any more additional questions? Okay. So let's answer. Okay, hold on. In the meantime, let me just share screen first. Okay. So yeah, this is the, yeah, for those who are keen, just scan this QR code. And then Tess is asking, given this situation, what will happen to the USD? How will it impact our equity and cash, which is in USD? How to protect? I also want to ask, right, because this has a lot to do with economic data. What do you think will likely to happen to the US dollar?
Okay, what's going to happen to the US dollar? At this point of time, I think that everything is going to be quite unpredictable. I think in terms of US dollar, right, there may be more flow because of the tariffs. there may be more demand for the US dollar in anticipation of the tariffs to come in when Donald J. Trump finally takes office in January. And that's why we've been seeing quite a lot of spikes. At this point of time, I believe when interest rates are going to be cut, US dollar will drop, but very, very softly. It's not a lot. Like I said, right now it's only 2 rate cuts next year rather than 4. So when the interest rate come down, usually people don't want to put their money in the currency which has lower interest. So that's why it may come down, but only a little bit.
So you think that it's not going to be an aggressive change, but I think still like I think for US dollar side, it's always about like once again it's about diversification as well. So I know that a lot of our value tied to the US dollar, right? Especially are invested in the US. So that's why over time I start to think about what other ways can I diversify, right? That's how I look into like, for example, cryptocurrency is one of them. Property is one of them that is in Sing dollar. Then obviously there are other things I hold like gold and all this. Yeah. So during tomorrow's Christmas party, I will also be sharing more detail because there will be more time for my segment as well to go through the portfolio deeper for 2025. Okay. So for those who are coming tomorrow, you are in for a treat as well. Okay. So any more additional questions? Right. So Eden, do you have any advice for people who are probably very new, right? To they're probably thinking about buying a property, but what should be the first step that they need to think about?
Okay, the first step of buying a property is understanding your budget. If you do not know what your budget is, you wouldn't be able to know what kind of property you are able to buy. In my in-principle approval process, I can share with you guys how it looks like. Give me a moment.
Okay, let me stop share. So if they are in the process of thinking about buying a property, will this consultation with you and your team still be relevant?
Very much so. Let me show you. So give me a moment. There we go. This is the calculator. So okay, so if you are able to see here, right, when I do my calculations for my client, I go super in depth. I am by understanding my client, all of these are fictitious, by the way, these are not real people. But when I know about John and Sally, right, what I can do in a hypothetical situation is to tell them exactly what is better for them. At this point of time, John is able to buy a private property of 1.4 million, HDB of this amount. Sally is able to buy private and HDB, and then over here I do an AIP for them both added together for private and HDB. So having this, right, especially for people who are starting, right, will be able to get a good overview on their whole financial situation. Then from there, I'll be able to say, hey, actually, your amount, you might want to go to HDB or you might want to go to private depending on the budget. We also help people count their budget all the way. So for example, if your property is $2.1 million, and then you have, for example, $500,000 in your CPF ordinary account, I can immediately tell you how much cash outlay you need to pay. I can immediately tell you how much your monthly mortgage is going to be. And I can tell you how much your CPF going to come in and how much your cash flow going to be. So this is very important for most people who are starting out because they need to be able to have a good overview and good understanding on what their objectives are. If it is for a larger space, maybe HDB might be better, especially for people who already have family. So there's quite a lot of consideration. So come over. We like to help people own homes.
That's awesome. Because I think like what Eden said, right? A lot of time when it comes to like let's say this is your first property, you want to think about how can you make sure you are able to be enjoying this entire process. Imagine you overstretch yourself, right? Maybe you put down a certain down payment for certain property that actually you're unable to afford. That is even worse, right? Then end up you have to like you will end up losing money because of that, right? So you want to make sure from the very beginning you are able to afford it, and then when you're able to buy it, right, what kind of situation that you can potentially see, right? Like in terms of cash flow wise, will you be cash flow positive? Will you be cash flow negative? Is this the situation that you want, right? That's how I think Ethan and his team is able to better advise you so that you have a better clarity when it comes to choosing your first property as well. I think that it's something very, very important, right? Then obviously, in terms of property wise, they are not going here to share with you, or what is the property to buy? I buy this, I buy that. No, okay, but at least they tell you, right, what should be the budget that you should be looking at so that you do not overstretch yourself and you still are able to get good cash flow for your property should you consider renting it out, right? That's for my case, right? But if you're staying it, then it's within your budget, then at least you can comfortably stay there and happily with your family as well, right? So any more additional questions from our audience here? How many of you felt that you learned a lot today? Okay, if you learned a lot, can you type learned in the chat, right? So every time I invite Ethan up, I always felt that I learned a lot because he really shared with me a lot of different insights, how we look at the economic situations, how we can implement that into the property market. And I always find that it's very insightful. So I'm also looking forward to working with Ethan next year to see how I can, you know, make my property situation even better. Okay. And then that's how eventually when let's say I buy a bigger house and I sell it away, I can also have better returns and even more capital gain. So that's what I'm looking forward to next year as well. And of course, when you plan to buy a property, it's not like a short decision, right? It's not like within a short period of time you make that decision. You do need time to think through and plan through it. And that's why even though I know that it's gonna be probably only next year, end of next year, I can start to make the final decision of selling away my property, then buying a new one. But I already start planning 1 year ago. And this is the time frame that I'm working with Eden like for entire 1 year. So that's why I felt that if you actually have certain plans, even though you think that the timeline is a little bit far off, but you never know. Actually, it's good to already start planning, even just prior 1 year ago, right?
Absolutely. And remember when we were choosing the package, the first thing I asked, any intention for sale? Yeah, it's always the first question because I always protect you from your penalties.
Yep. All right. So so remember to just scan this QR code and then jump on a call with Eden and the team. They will be able to best advise you, and it's complimentary. Okay. How do they make money? It's only when they're able to help you to source for the best deal, best mortgage solution for you. Then it's the banks who pay them. And if you walk into the banks yourself, firstly, you're not likely to get the rates that they are able to give you because Ethan, he actually used to be a banker, and that's why he had a lot of really good relationship with different banks, and that's how as a mortgage broker they are able to get favorable rates as compared to you walking as a customer. So yeah, so do talk to them if you really want to save money, and it's not small amount, like it's like 5 figures for yourself in the next 2 years as well, right? So that's for Eden's case. And then for my case, all right, for those who are joining us physically, congratulations, you already got your ticket. That's great, right? Make sure you turn up to bring some food, all right, because it's a potluck Christmas learning party. So since it's a Christmas learning party, you don't need to bring Christmas gift. There's no gift exchange. All I need is to get you some food, you know, like bring some drinks or bring some food for sharing, okay? Of course, I don't need you to bring for 100 packs, okay? I just need you to bring for like 2 to 3 people. So that if everybody bring food for 2 to 3 people, right? Then I can eat a little bit of this, you can eat a little bit of that. Then everybody have a variety of food to try to eat as well. Okay, so that's for those who are lucky enough to get the physical pass. However, because the physical pass right now is fully sold, right? Like it's like 100 packs capacity. I cannot accommodate more. So if you want to jump on online Zoom together with us, then you can still ask us a question. You can still watch the entire things as if it's live. It's actually live at the comfort of your home. And it's only $9.90, and I call this the all-in-one online pass. Okay, so you will have the Zoom link. sent to you once you join the all-in-one online class at only $9.90. And on top of that, you will also be able to get the recording of the entire training session tomorrow. It's 1 p.m. to 6 p.m. So it's like 5 hours, minimally 5 hours worth of knowledge, insights, and strategies. And then on top of that, there will be also a workbook provided for you with speaker slides as well after the party is over. So you can rewatch it again and again at your own time, right, with the workbook with you as well, right? So what time would the Zoom timing is also 1 to 6. When the party starts, okay, that's when the Zoom room will also start. So you can come in at 1 p.m. and maybe there's just a little bit of delay and networking at the initial time, but just start streaming in at 1 p.m. And then when we start, then everybody starts together. Okay, so any more additional question? All right, before we wrap up for today. All right, so join the, okay, so let me just quickly share screen. When you click on the link that I just sent you, right, the all-in-one online pass, what would that look like? Okay, so basically this is a platform developed by Nas Daily, and I think that this is a great platform that like very user friendly. So when you go in there, like basically it's a challenge, right? So you just need to click on join the challenge, right? And then if you want to read more about what are you going to learn for tomorrow's party, you can just scroll down a little bit more, like for example, altcoin, because I'm inviting crypto experts, right? So they will share about different strategies, how they manage to achieve a very, very good return in a very safe way. And then of course, there will be other things that we'll be sharing as well. And we are actually inviting quite a lot of very influential and famous speakers coming here, including one of the speaker I interviewed before, right? And he's a almighty, all-time favorite of many investors among the investing community. Okay, start with AK. Okay, so anybody know who he is? AK. Who is AK? If you don't mind sharing, what would be your entry and exit for okay, so actually Lucine, actually tomorrow during my segment, right, because I will be the one starting off the segment for my Christmas party, I will also be sharing that as well. So today, okay, due to time constraint, I won't have time to go through more, but tomorrow, that's where the entire Christmas party, I'll be sharing my strategies, different speakers will be sharing, and then the AK is exactly, all right, Adam Khoo will also be coming. So he has confirmed with me, he's coming in the afternoon as well. So if you want to meet him in person, right, and we're going to do a Q&A session for him as well. So if you want to ask him questions, then join the party, right? Be it online or physically. And I will look forward to seeing every single one of you. All right. So that's all I have to share from you with you all. Hope you guys learned a lot and had a lot of fun. Okay. If you learned a lot and had a lot of fun, type arigato in the chat. Okay. How many of you had a lot of fun? Okay. In the meanwhile, okay, I'm going to take a picture together with Ethan. And yeah, it's so-called our Christmas picture, but Ethan is coming tomorrow. Okay, so Ethan, are you ready to smile big and nice? Okay, so now 3, 2, 1. Awesome. Okay, this is
All
great.
right.
Thank you so much for your insights today, and look
Most
forward
welcome.
to
Happy to be here.
tomorrow.
Thank you for having me again. I really appreciate it. Thank you all for watching also.
Thank you. Yeah, thank you everybody for spending your precious time with us, right? Because you could have spent this 1 hour plus watching Netflix, but you are here for that. Can you give yourself a big round of applause? Can you type CCC for yourself, right? Being so committed in your own growth, learning about different insights about investing. So you are awesome. Okay, so tomorrow when you are coming, okay, we'll be sharing a lot more as well. And looking forward to seeing you in person if you are able to get the physical ticket as well. All right, so see you guys tomorrow. Thank you. Arigato. Thank you, Ethan. See you
Welcome. See you all.
tomorrow
Bye-bye.
too. See you. Bye.